So for tonight's webinar, I've done a couple of these already. This one's a little different in that there's a little bit more kind of explaining of the background, just because that this webinar has been intended for people who are a little newer, at least to our process. But I also know that there's people on here that are, also familiar with kind of the things that we do and stuff like that too. And so the goal tonight is just to kind of show you some kind of things like how the markets have changed and how they work and all that kind of stuff, and just how we can kind of take advantage of it. And we can do all that. All right. Hey, Bob, good to see you. So let's just kind of dive right in. So first of all, welcome to everybody. That covers almost every language, but not all of them. And really what the question comes down to, and this is kind of the thing that I'm getting really with all markets right now, whether it's the S&P 500 or the NASDAQ or NVIDIA or Bitcoin, is that how long can we continue to keep calm and just buy the dip, right? I mean, we all know at some point that it ends in tears, but it doesn't necessarily mean that just because, we think that's going to happen doesn't mean it's going to happen tomorrow, right? So we want to take advantage of it. And we also just want to know, really what this is about is, if a market is expanding, we want to participate in that, but we don't want to hold through a big pullback or a top. And we want to be able to identify that. We want to be able to identify when the institutions are actually stepping in and taking the other side of that trade. So just things like that. And while directional trades are great, and when they set up, when we see those, we want to line up and we want to take advantage of that. Okay, we also want to be aware of when those directional trades are going to turn into bigger than normal pullbacks. Okay, so some of the keys to becoming and I look at this as this is the time of the year when we start planning for 2018. Okay, 2018 is coming along. When January 1st hits or the first trading day of the year hits, you want to have your updated trading plan. You want to have all your strategies in place. And part of what I'm going to be doing is adding some strategies that just in terms of being on the same side of the market as the algorithms. Okay, if we're not aware of that, things can get very difficult. So some of the keys that I'm looking for and want to share tonight in terms of just becoming a top trader in general is learning how to use leverage in a way that grows an account safely and quickly. Okay, developing or utilizing proven trading systems and setups as part of your daily money-making routine, and knowing when to stand aside, knowing when to trade normally and conservatively, and knowing exactly when to hang on for the big trade. This is a big deal. And last but not least, knowing what the computer-generated algorithms are doing so you don't get run over by them. This is not something that was a big deal until more recently, and it's getting more prevalent, and we want to be aware of that, okay? So the question is for people that aren't familiar with options is why options? Well, to grow an account quickly in the financial markets, a trader must do two things. One, you got to overall keep what you have. It's okay to have some small losses here and there, but you want to keep what you have. The best traders I know hate losing money. They structure their trades in such a way that if they're wrong, they don't lose a lot of money, but if they're right, they can actually have some pretty decent upside. So you want to limit risk even in the face of an unexpected disaster. And also trading small. And here's the thing about trading small, and I've talked about this, and this is a great experiment. And trading small is kind of relative. It's relative to your intestinal fortitude as well as your account size. But what happens if you trade a little smaller than you're used to, or than you think you need to, it gives you a much better view of the trade, a much more objective view of the trade, and you can hold on to that sucker better. You can cut losses less emotionally, okay? And so there's something to be said for that. So we're just talking about safety and leverage. So the new reality of the markets, though, is that there is momentum trading, and it's great when everything aligns up, and that's kind of how I cut my teeth in the markets, and this is what I'm always looking for, is when is the next momentum trade setting up, because I want to take advantage of that. But what most of the funds and algorithms and black boxes have switched to is an aggressive campaign of reversion to the mean trading, okay? And I want to highlight aggressive campaign here because reversion to the mean trading is typically not aggressive, but it has turned aggressive because more and more of the funds and more of the computer-generated systems are doing it, okay? And when you have the more funds and computer-generated systems that are doing it, the more of a self-fulfilling prophecy it becomes, all right? We just want to be aware of this. So we have to be aware of this, or it will always catch us off guard, identify exactly when they are doing it, and attach ourselves to the trade flow. And so how this kind of works is that, you kind of have this uptrend, and you kind of get used to buying the dips, and then one of those pullbacks are like this, okay? This is the move that I'm talking about here. And if we can identify this in advance, okay, then we're not going to get, we're not going to like make money for 3 months and give it all back in a week in that type of a situation. And on the other hand, we're going to recognize that and actually get on the same side of those guys, so that becomes a profitable experience, all right? Now, at the end of the day, we cannot fight the funds. We're retail traders. We don't have enough money to do that. But if you guys know what this fish is, it is a remora, okay? And with a remora, you can attach yourself to what the whales are doing. And if you know in advance what the whales are about to do, and you can attach yourself to that trade, then it becomes a much more pleasant experience, okay? So real quick, for those of you that are newer kind of to simpler in what we're doing, why listen to me? I'll give you a 30-second background here. I grew up, my background's more military family. This is me with my great-grandfather. He fought in World War I, Grandpa Good, great-grandpa Good. Frank Williams fought in World War II. My dad fought in Vietnam. They were all alive about the same time there. And so I always kind of grew up in that kind of environment. I do have a book out, Mastering the Trade. This has kind of detailed my trading journey and some of the biggest lessons learned. For a while, I did go out on the speaking circuit and do the TVs, and that was all fun. And through trading, I've had a chance to meet with some of my heroes. I've done some work with oil analysis with Richard Branson, which has been amazing. But these days I've got kids, and I really just want to be able to have time to hang out with my kids. So I kind of pass on the speaking opportunities and the TV stuff, and I just want to trade. I want to hang out with my kids because at some point, they're going to turn into teenagers and they're going to hate me. So I just want to make sure that I get to spend some time with them before that happens. So at the end of the day, I am a trader. That's what I'm passionate about. Nobody really understands it except other traders. It's really like if you don't have the trading bug, like my wife, she doesn't, which is probably good. But I don't sit there and like, oh my God, let's talk about all these market theories, right? Even if I want to, I get to talk about them with you guys, which is great. So trading is just kind of, it's in my blood. For those of you that were around in our trading room in January of 2014, there was the first time ever that I had made $1 million in one day on a trade, which was awesome. And it's great when that happens, obviously. But here's a secret, yeah, those home run trades are great, but I don't plan for them. Okay, you cannot plan for them. You don't know when they're going to happen. So you think of it as a bonus for when they happen. And as retail traders, we have a unique niche in the markets that funds cannot replicate, okay? And because we can get in and out of a position at the click of a mouse, whereas they need weeks to plan it, okay? And it gives us a huge edge, and we've got to learn how to exploit it. And that is essentially how to manage winning trades in such a way that they continually reduce risk while increasing the probability of additional reward, okay? That means knowing when to hold on for a big move like that, and also knowing when to identify when the algorithms are stepping in to rip that sucker back to the mean. If you can identify that in advance, you can play with it, okay? That's how the funds trade. They'll take weeks to establish a position for a reversion to the mean, and then when it reverts to the mean, they take weeks to get out of it, okay? And if you know what to look for, it's painfully obvious in hindsight, but if we don't understand what to look for, we get whipsawed. That's not fun. So part of my trading plan for 2018 is to, in addition to the momentum trading that I like to do, is to do a lot more of this reversion to the mean trading, where it's trading on the same side as the algorithms, okay? All right, so for that kind of stuff, it's all about understanding the cycle. Stocks undergo cycles of accumulation that set them up for highly focused expansion moves. And this is going to be the first setup that we're going to focus on tonight, are some enhanced ways to find those highly focused expansion type moves. These are fun to catch. It's my favorite way to trade, but you have to be able to identify them and that they are setting up, or you're going to miss them, or worse, you're going to get completely run over them. You're not going to see that they're setting up. You're going to buy the dip and you're going to get killed. Okay, and from there, when do funds start making those serious bets on a reversion to the mean? It's their bets that drive this entire process. Okay, the markets are not, like NVIDIA is not going up because it's a great company. It's going up because there's an expansion move underway that's first set up by the funds, and then a violent reversion to the mean that's also set up by the funds that does not in any way, shape, or form a reflection of the business prospects of that company. Okay, and the more we understand that, the more we realize that the news is completely irrelevant, and it's the flow, the order flow of the funds that we have to pay attention to. And the other thing to keep in mind is that order flow of funds can be caused by something like this. They may have a charter as part of their fund, and this is very common, that no one stock can represent more than 1% of their fund. And so they start off and, you know, they may put 0.5% of their billion-dollar fund into NVIDIA, all right, and NVIDIA goes from $60 to $220, and now it represents 1.75%. So at the end of the month, they got to sell enough of this to get it back below 1%, okay? That's the kind of selling that drives it back to the mean, and that's the kind of stuff that we want to pay attention to. That is not news-driven selling. So what does this look like? And I'll talk more about this later, but essentially there's three main time frames that you want to look for reversion to the mean trades. There's daily charts, there's hourly charts, and there's 5-minute charts. You can think of it this way. Daily charts are more swing type trades that could last a couple of weeks. Hourly charts can last a couple of days, whereas a 5-minute chart is a day trade. So here's Baidu. Okay, on Baidu we started getting algo signals, all right, and the reversion to the mean on each one's different. Okay, so for a daily chart, you're coming back to the 105 period EMA, bam, it's a fulfillment of the process. On the hourly chart, you get the little hats there, boom, little hats there, boom. That's what you're looking for. On a 5-minute chart, boom, there, and then boom, and now I'm looking for a move back there. Well, I'll come back to this, but I just want you to realize that you can do this on 3 different time frames depending on what market you're trading, okay? Now, the thing with this is that they seem to happen out of the blue. Hardly anyone sees it coming, and in hindsight, it is obvious, but in the moment, with everything else that is going on, it is just noise, which begs the question, what do the best trades look like before they actually happen? Okay, and so what we're going to talk about tonight are 2 main things, and one is what I call focused expansion trades. These are the most fun. This is my preference, but what's happening more and more is this market is being dominated by these reversion to the mean trades, and we've got to be able to identify those. But let's focus on the expansion trades, the momentum type trades first. So let's see here. Well, that's a good question. How is it different than oversold or overbought? Well, you've seen, if you've ever done just basic oversold or overbought, you'll know that oversold or overbought can stay that way for a long time, okay? This is, on something like this, you know, Baidu went up a long ways. And if you'll see here, I mean, this was, if we're looking at, like, say, a stochastics or an RSI, it's going to be overbought, 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 but there's not an algo trigger to start shorting until here. So we'll talk more about that. So there's a difference between overbought and oversold versus like multiple things coming together that trigger a signal. Okay, and that's the key. It's what's triggering the signal. And it's very, very rare that there are no successful black box systems out there that fade overbought and oversold. Just FYI. So if we're talking about focus momentum, you know, what is focus momentum? What is the story there? And if you guys, and I don't want to, you know, completely dive into the squeeze, but the squeeze is one of my favorite setups, okay? And all the squeeze is that it is a compression of volatility. So if you think of volatility as being compressed, okay, then at some point, once it gets compressed too much, then the volatility has to expand. And if the volatility is expanding, then price movement is also accelerating. So if we think of it this way, okay, if we think of it this way, then here's consolidation. Okay, this is quiet, and that's being represented by the red dots. That's saying, hey, volatility is compressing, and then volatility is released. And when it's released by that green dot there, if the histogram is above 0, we're saying, all right, price is going to go higher. So what I'm talking about, and that's a great signal in of itself. Okay, and here you can see there's a monthly one and a weekly one. I mean, what a beautiful squeeze here, price expansion. And a daily one, beautiful one there. But what you'll notice here is that these are all kind of happening concurrently. And so while a squeeze by itself is powerful, the most powerful moves, okay, and look, the most fun when you're trading is to buy options at $1 and sell them at like $6. All right, that's amazing. So this is the kind of thing where it's like, all right, if you're buying, you're buying calls here and we're at $70 and we go to 85, that's a big move. That's 10. I mean, that's sometimes buying options at $1 and selling it up $10. But you've got to be able to recognize that. And so what we're looking for here for these focused expansion moves are when these squeeze are all setting up at the same time. Okay, so this got me to thinking. First, are there hidden time frames or more time frames that I should be watching for squeezes? Second, how many time frames should I watch to grab hold of the biggest moves? Third, how many squeezes is ideal? Fourth, what about heads-up alerts? Okay, and so all right, and so when I think about this kind of stuff, and usually I'll be on a plane or on a paddleboard like in Cayman, and I'm a strange guy. I think about trading like all the time, and it's like, all right, well, gosh, what if we did this? What if we did this? And then I can come back and ask questions and do some research and continue to expand. So here's the kind of stuff that got me excited, is I would sit there and say, well, XLY, look at this move here. We went from $92 up to 96, and it was an amazing move. But when I look at this daily squeeze, that was, that's a squeeze I'd miss. It was not clean. You got 2 dots here, and then it fired, and then it went back to red, and it's like, you know what, give me something else to do. That's just boring. But then, out of nowhere, no signal on a daily chart, this thing takes off. And so I just got to thinking like, okay, are there time frames out there that I'm not paying attention to? Or are there multiple things setting up? Okay. And then if I back out and I say, all right, well, look, gosh, on a 4-day chart, there was a massive squeeze setting up. I never look at a 4-day chart. On the 3-day chart, massive squeeze setting up. I never look at a 3-day chart. Okay. And then the 2-day chart, there was even a little squeeze there too. It's like, okay, well, that's interesting. So, I started thinking again, as a trader, you kind of get that FOMO. You don't want to miss out on these trades. Okay. So what to do? So then I started doing this, and I'd sit there and say, all right, well, I don't want to miss out on this stuff. So I put together this workspace. It's got 10 charts, all with the squeezes from monthly, weekly, 4-day, 3-day, 2-day, daily, 4-hour, 2-hour, 1 hour, and 30 minutes. I'm like, okay, now I can see XLY. And if I can see a lot of squeezes setting up at the same time, then I know that this is going to be pretty powerful. Now, as you can imagine, that while this is an attractive idea, or at least I thought it was pretty exciting, the being able to actually look at this and execute it was something else. And that's really like, I mean, it's like a business. You can have a great idea, but if it can't be executed, it's kind of worthless. It's the same thing in trading. You can have a great idea, but if it can't be followed through, if it can't be tracked easily, if a signal can't, pop out of the page there, then it's worthless. It's just an idea that's non-executable. So I was excited about this, but as you can imagine, I was also a little dismayed. It's like, how is this really going to work? So what I came to the conclusion of is that watching all 10 charts is ridiculous. And even if I was watching them, it still wasn't easy to see squeezes lining up on multiple time frames. And of course, I would have to keep entering symbols and looking at all 10 charts throughout the day. And so that's when I called Eric. So if you guys are familiar with Eric, he's a coding genius, flew fighter planes, studied nuclear-based physics. I mean, it's like, so I feel very confident when I ask him like a trading question that he's going to be able to put on, sharpen his pencil and say, yeah, give me a few days and I can figure that out. And it's always fun to talk to him about trading ideas. So we talked and talked. Oh, I love this graphic. Nice work, Sarah. And I said, hey, Eric, can I see 10 time frames of the squeeze and have it be quick and visually easy and it doesn't become a data or a memory hog? And Eric's like, yo, man, give me a week. Eric, I'm just seeing this. This is awesome. So a week later, he sent me some code, and I opened it up, and I saw this, and it's like, okay, this got me really interested. So as you can see here now, all of those 10 time frames that I was looking at, here I can see them all here at a glance. So if you think about this now, it's like, okay, I can see at a glance on the symbol LYB, the 30-minute charts in a squeeze, the 4-hour charts in a squeeze, and the daily charts in a squeeze. Okay, and that to me suddenly got very, very interesting because now I could go through a watch list very quickly. Okay, and if there's that many squeezes setting up, and I kind of have a rule here, if there's over 4, okay, then I will buy the at the money to out of the money options, because believe it or not, although the out of the money options are the worst ones to buy most of the time, if you do have a greater than expected move, they're actually the best ones to buy. Okay, because a lot of times what will happen is you may buy an option in the money option at 4 and it goes to 6. Okay, that's great. But at the same time, the out of the money option, went from 50 cents to $1.50. So in terms of, percentage return and stuff like that too, there's some attractive things there. So, and we can go here and we look at this and say, okay, if I was looking at all 10 charts, I'd sit there and go like, okay, there's one and there's one. And okay, well, that one fired, so that one's already underway, and there's one. And so, that takes a lot of time versus just going, oh, bam. Okay, so that's what I need when I trade. It's got to be bam or there's no trade. Okay, so that's kind of like my favorite setup is, I just call it, bam, for lack of a better term. Now, from here, I started thinking, well, if that's so easy and I want to do some day trades, could we also incorporate the 20-minute, the 15-minute, the 10-minute, 5-minute, 4-minute, 3-minute, 2-minute, and 1-minute chart? So if I'm day trading futures or I'm looking at a gap, I can hone in onto all of those different time frames. Okay, so this way it gives me the freedom to do a focused momentum trade for the course of 2 hours. Okay, if there's a lot of those smaller time frames setting up, or if I want to choose to look at the bigger ones. Also, keep in mind that when a squeeze on a smaller time frame fires, like the 5-minute and the 10-minute, that ends up triggering, that's the fuse that lights the fire of the bigger ones, okay? And those can be these amazing chain reactions that turn out to be the best risk-to-reward ratios because they start off on those smaller time frames where you can use smaller stops, and then they start triggering all the other time frames into a bigger move. It's fantastic. So for Red Hat example, this is a trade we're in for about 4 days and the options almost doubled. Okay, it was a great return, very low risk, hardly any dip. NVIDIA, when everything lined up like that, that means, hey, let's line up and take a little bit bigger trade on this one so we can knock it out. Okay, and that's the kind of stuff that I like to look for. So as an example here as well, this was a stock that we were looking at last week, PRAH, and last week when we were looking at this, we could sit there and say, okay, wow, there's a 2-day squeeze, a daily squeeze, a 4-hour squeeze, a 2-hour squeeze, and a 60-minute squeeze, and the stock was at $81.50, okay? We could pick it up, and now you can see that as of this screenshot, earlier today it was $83.79, but it actually closed today at $84.61. I mean, the stock just kept on going. We can see like right here. So that's the kind of stuff that I'm looking at. So on a move like this, what happens is that you can get these, because it's like, an $82 option at this point was 75 cents, okay? And now the thing is trading at $2.50 over 2 days. That is a huge return, okay, over a 2.5x in a couple of days. That's the kind of stuff that I get excited about. You don't have to have an Amazon go from $1,000 to $1,100, okay, to make a lot of money on these. If you can time it and see a focused expansion move where a stock's going to go from $81.60 to $84.60, and you're buying some at the money or out of the money options or even in the money options, okay, and you can sell put spreads and stuff like that, but you can get very focused expansion moves. And it's the difference between buying calls and sitting through this crap, okay, versus buying calls and enjoying a ride higher. That's what we're looking at. It's timing, 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 okay? So what we're looking at in terms of this year especially is an environment where you have low volatility and low volume. And one of the biggest things I've heard this year, there's a lot of bearishness in the markets right now. And I can promise you, as long as you hear this rampant bearishness, the market's going to keep going higher. This is exactly what happened in 1999. It's going to go, it goes higher than anybody thinks it's going to go. It overshoots, and then you have the correction. So you don't want to sit there and be positioned for a correction when you have no signals, right, for a correction. And one of the things that they point to is the low volume. Low volume has nothing to do with it. There's this year has been characterized by a very quiet VIX, okay? And keep in mind that all a VIX does is measure investors' willingness to hedge, okay? And I think that's one thing that's lost, especially on the pundits over at CNBC. All it measures is an investor's willingness to hedge. And right now, a lot of people are not hedging their portfolios by buying puts on the indexes because they are doing something else. And it's critical to understand that. What they're doing to hedge is they're doing aggressive sector rotation, okay? You can see a 5-day return of the sectors. You had the S&P is up 1.5%. More money was flowing into consumer discretionary, but it was flowing out of tech and out of real estate, okay? And it was going into energy, into consumer discretionary, into financials. This sector rotation, okay, keeps the indexes quiet and keeps the VIX low. The aggressive trading is within the sectors, and then the more aggressive trading from that is within the individual stocks in each sector themselves. As I talked about earlier, when those individual stocks hit that benchmark, that charter level, and these algos know when that's going to happen. And when they know that's going to happen, and it's typically an end-of-month phenomena, they start taking positions to capitalize on that, okay? So keep in mind that in addition to sector rotation, funds are all piling into the same stocks, which is driving them up higher than everything else. So why are they all doing the same stocks? Because they've got to beat the indexes. If they beat the indexes, then at the end of the year, they got a lot more money to invest, which means their bonuses are going to be huge. That's their whole goal. If they merely match the indexes, and then their investors are going to realize, gosh, we could just go into an index fund and we're going to save a lot of money on fees. Okay, and obviously if they don't beat the indexes, then they're just going to be watching billions instead of actually trying to make billions. So, but this does cause problems, which the retail investor, because of our liquidity, okay, can take advantage of. First, it creates a self-fulfilling prophecy where to beat the indexes, everyone has to be in the same high-flying stocks. So when the expansion move happens, it happens at a greater rate than almost anything else around, so it's awesome to catch that to the upside. Most funds have charters that a single stock cannot represent more than 1% of their entire portfolio. So this concentrated buying causes stocks to push beyond that level, and funds have to start selling to lighten up. The algos keep track of this stuff, okay? And they start realizing, like, all right, we're getting a lot of funds here that are breaking this threshold. Let's start shorting this, okay, and acquiring a position so that when they dump this, we can get a reversion going. And it's the same on both sides of the market. So the algos are front running this, forcing exits and creating a strategy that forces a reversion to the weekly mean. So the question is, how do you tell when this is happening? Let me check the questions here real quick. John, the problem as I see it is that new squeeze will only show what is in a squeeze on the shorter time frame. It could have fired right before we look at it. That is a good point, Ken. So how I look at it, and I'm going to talk a lot more about this on Saturday, but how I look at it is I look at that as kind of my radar to see what's setting up. But I also then like to, if it's something that it's, I narrow it down to my watch list, I can then also look at those larger time frames, the multiple time frames, to see, okay, has something just fired off or not? My main goal with that is especially with the indexes, okay, because the indexes drive everything else. I want to know when the indexes have 6 squeezes going on. It's like, because then that's something that we can keep an eye on, and we know something that's setting up, and of course that's going to impact the most stocks. So, okay, first the why. So I already talked about all this, so I'm not going to repeat that. In other words, in this market, and the reason we have not had a 3% correction since November of 2016, it's like the longest period in the history of the stock market that we have not seen a 3% correction. And the reason we're not seeing index corrections is we're seeing, one, sector rotation, and two, we are seeing position corrections, okay? All the money is in individual stocks. It's not all piling into the indexes. So we do need to understand, because when these position corrections happen, they can correct 15% easily. Now, while the indexes may be doing nothing, if you've got a lot of your net worth in that stock, that's a pullback. It doesn't matter how you measure that. That's not a fun pullback to hang on to. And we want to be aware of this phenomena when it's setting up. So one, we can at least get out of our longs and not get shaken like that, because it's no fun. And two, if we're more aggressive, we can participate with the algos on that trade, which is fun. So anyway, so that's the kind of stuff there that we want to pay attention to. So long story short, as I started to realize this, and this is where, when I at trade shows, and there's different firms that I'll go to, and I'm talking to them about this, and like, what are you guys doing? And this is the kind of stuff that I'll hear about. It's like, okay, so let's put something together so that at least we know when they're doing this, okay? So then I started asking, Eric and I got on the phone again. I should probably go back to that graphic, Eric, so we can show you and I talking on the phone like that. I was like, hey, this will be amazing for not only getting into sector rotation, because it does help identify sector rotation, which is big in and of itself, because sector rotation does not happen just because something gets overbought or oversold. In this market, overbought stays overbought, oversold stays oversold for a very long time. So you can't just, short something because it's overbought. That's a ticket to the poorhouse. But at some point, obviously, there's rotation going on, and obviously there's some puking going on. You see NVIDIA, get hammered and all these different stocks. We just want to know when that's about to happen. Okay, so I just want to know, hey, here's the parameters that I'm looking for, Eric. Can you set something up so that I can see on my chart when the algos start front-running the funds on their largest holdings, so I know when the puke is about to happen or potentially could happen, okay? And also, exactly when they start prepping for sector rotation, because I don't want to be caught off guard with sector rotation either, okay? So I was pretty needy in this conversation. So he got right to it and started coming back with these. Okay, so what are these? So you'll notice here that there's different colors. And again, I go back to looking at what I call daily, hourly, and 5-minute ones. So the purple ones are daily. There's a daily signal. And the yellow ones are hourly signals, okay? They're different. They have different targets. We'll talk more about that. But when they happen at the same time, that's a plus. So here's NVIDIA. So we get up to this point, and it's like you can see there's a big crush after that. We get up to this point, there's a big crush after that, okay? But it happens on the downside too. At some point, the downside move is too high and it comes back to a certain level. The downside move is too much and it comes back to a certain level. So the question is kind of, where are those levels, okay, and what do we want to be looking for? Now, here's the Qs. Again, hourly chart, right? Qs have been pretty solid. We're getting daily and hourly signals. Bam. Okay, now those have been alleviated. Those have been out. We're getting hourly and daily signals. Bam. Okay, again, but it happens on the downside as well. And so, again, it's a signal. It's where the algos start taking the opposite side of the move, and that's what we want to be aware of. And although there's obviously a lot of stocks that have been in strong uptrends, it also works in reverse. At some point, an auto zone becomes a value stock and the algos start legging into it, okay? So it works both ways. A good example of this too is that about the time that Amazon was reverting this way, IBM was going this way because they both had opposing signals. IBM had become a value stock, whereas Amazon had reached the point where it needed to be liquidated. Okay, so part of what I like to look at here is, yeah, and Bob, we'll talk about that one here. Bob's just asking, so how do you define this? So let's look at a normal chart. So here is a daily chart. So let's take Baidu. So I've got a daily chart here, okay, daily chart, an hourly chart, and a 5-minute chart. Now notice here that the daily chart's going to look at all the time frames of daily and above, squeeze. The hourly chart is going to look at the hourly chart and everything above. And then the 5-minute chart will look at the 5-minute chart plus everything above. So I can see here at the time of this, I can say, okay, cool, there's a 4-hour squeeze developing in Baidu. Just, tuck that information away. But what I want to know is, we shot up here. Why did it just consolidate? Okay, but when we got here, it puked. All right, so you got consolidate, and then you got puke. And so the big question is why, after a big move, how can you tell if something is potentially going to consolidate and continue versus after this big move, it's going to consolidate and puke? All right, I mean, that's a valid question. And then, but keep in mind too, and this is the part that I like, especially as a trader, is that you've got to realize that within the context of the daily chart, there's also a lot of stuff going on. Okay, so yeah, there's a big move from here to here on the daily chart, but you've also got these smaller waves, okay, in here. You play those on an hourly chart. Okay, so this is now here, and believe it or not, the same principle applies. Okay, but then here, we look at this part right here, you could also play that on the 5-minute chart, and the same principle applies. It's just different signals. So what do we do next? So then we add Eric's tool, bam, and now we can suddenly see, again, on a daily chart, pink is daily algos setting up for reversion to the mean. Okay, so when you see that, you'll notice that when you see one, it doesn't mean that it's going to stop in its tracks and immediately reverse. What it means is they're starting to nibble. They're starting to scale in, and these guys scale in a big way. So let's get 1,000 shares here. Let's get 2,000 shares here. Let's get 4,000 shares here. And they're doing it with shares of stock. I would do it with options. So it could be, all right, I'm going to start off by buying one put here or selling a call credit spread. But you've got to leg in. You've obviously got to have a specific money management plan. And you've got to know when it's like, okay, I've got to, you can't do it forever, right? So these specific things you want to look for. And then what's interesting here is then why did it come here and stop? Okay, so what's the mean that they're looking for? It doesn't mean they're going to get it every time, but there's certainly a target. Okay, and it's not the daily, and it's not what's on the daily chart. They're actually shooting for a target on the weekly chart. Okay, so daily signal, weekly target. On the hourly, you can see it's like, okay, we're getting signals here, and then we're getting signals here, but why did it stop right there? Okay, so same thing here. On the hourly, they're shooting for the 4-hour mean, and then on the 5-minute chart, they get the signals, they're shooting for the 30-minute mean. So what does that, so if that all sounds confusing, let's look at this next chart, bam. And you'll see here that there's these different levels. So in this case, on the daily chart, the level is right around 231.41. On the hourly chart, it's 235.96 in this particular case. And then on the 5-minute chart, 234.03. So they're totally different, but you can see from here, it triggers to that one. From here, triggers to here. From here, triggers back to here. Sometimes it'll bounce and keep going. Sometimes you'll get something like this. You can see here, we triggered back to the mean. That's the kind of stuff that I got interested in, okay? So a couple things here that I like about this, okay? So first of all, I remember this squeeze on the daily chart. So great, here's a squeeze. We've got consolidation. Now, what you'll notice here is that there were no algos setting up for a reversion to the mean. At this moment in time, they were not setting for this, but up here they were. That's the kind of stuff that I want to know about. So if I see that, man, this is extended, but we've got a squeeze, but the algos are not setting up to take the opposite side of this trade, cool, I'll take it. But on the other hand, if I'm in the squeeze and I start to see this stuff, you can bet I'm getting out of my trade and then potentially looking for a reverse, okay? And then same thing here. If you look at this on the hourly chart, you'll notice that, gosh, where it must be right, yeah, right here. So here on the hourly, we got the signals, and so that prompted a reversion there. So you just kind of pick your time frame. I like to look at all these, and hey, this thing gaps up, you get all this, guess what? Boom, reversion to the mean. So those are the kind of stuff that I like to look for. So I liked it a lot. So at the end of the day, the markets are evolving, and we have to have the edge to deal with it. Okay, and the only way to have edge is to know what the algos are doing and when they're doing it. Not only does that help you, one, say, great, like in the case of Baidu, I'm fine taking that squeeze, and in that particular case, there were multiple squeezes that it sent up, okay, but hey, here's a squeeze with no algo signals, so I'm definitely going to take that. But then two, when I see the algo signals, not only can I take profits on my long, but I can start looking at potentially setting up a short for a reversion back to the mean. So very, very valuable information, okay? So at the end of the day, I'll show you a couple more things and I want to answer questions. But, this is always my goal as I start like this. I'm looking at 2018. It's like, okay, what do I want my equity curve to look like, right? I don't want it to look like this. So if I want it to look like this, I've got to be up to speed and up to date on all the strategies that are driving the markets now, okay? This whole thing with algorithms aggressively reverting back to the mean, it's always been there lightly. I have not seen it this aggressive before. So this is something that I don't do a lot of reversion to the mean trading, but it's something I'm starting to do, and I'm going to be incorporating into my 2018 plan because of what's happening in the markets, okay? And, it's interesting like this too, and this is one of my favorite stories from Mark Douglas, is that if we don't have a plan, what happens is we approach the market from the mental state of what happened on our last two trades. If our last two trades is like, so the story he has is like, look, you're 5 years old, you're out in the park, and the first dog that you've ever met in your life is super friendly, comes up and licks your face. For the rest of your life, instinctively, anytime you see a dog, you'll have warm, fuzzy feelings, even if you end up having a couple of bad experiences with them, because this has been imprinted on your brain. Your brain is a survival mechanism, and at all times is doing things like scanning for food, water, danger, things like that. And that's the stuff that's hardwired into you. So your first experience like that is super important. If, on the other hand, as a 5-year-old kid, the first time you ever see a dog and it rips your arm off, then for the rest of your life, unless you undergo very serious counseling, every time you see a dog, like, you won't even be able to actually consciously think about it. Your body will react before your brain does. You will instantly feel that fear. So I bring this up because this is on a smaller level how a trader reacts, how their brain is based on their last two trades. So if your last two trades were great, man, I bought Bitcoin and it exploded, and then I went ahead and I bought Nvidia and it exploded. Then all of a sudden you're going to approach the markets in a state of mind of euphoria, okay, which opens yourself up for disaster. If the last two trades kicked your butt, then you're going to approach the market on your third trade from the state of mind of complete fear, okay? Both of those are no good. The state of mind that works is the same state of mind that you have when you walk up to a casino. You're walking in through a casino and you see a slot machine and you just walk up and you put a quarter in there. You have no expectations of winning or losing, and whether you win or lose, you realize it had nothing to do with you. And that's the right state of mind for the markets. It's a beginner state of mind with no expectation. The beautiful thing about trading, as opposed to pulling the handle of a slot machine, is that in trading, you can actually look for situations that define an edge, okay? Wow, when these things come together, my edge has suddenly increased to 76%, okay? If you're at a blackjack table and you knew there was a 76 probability of you getting a blackjack on the next hand, you are going to bet bigger, okay? So that's the kind of stuff that you want to be if you've got the right tools and you match that up with the right mental state, you can be unstoppable, okay? So first and foremost, trading options consistently is nearly impossible if you do not understand the underlying shifts that are happening in the markets. Whether you sell options for premium, which is a higher probability way to trade, but especially if you're doing some directional stuff, you've got to understand these ebbs and flows, and you've got to be on the right side of them. Is the market setting up for a massive expansion, okay? Or is it setting up for a massive and violent reversion to the weekly mean, okay, if you're looking at daily charts. And you want to know, is this a normal market or about to make a huge shift? Is this consolidation fine because the algos, like in Baidu, are not taking the opposite side of it? Or if they are taking the opposite side of it, look for that to fail and revert back to the mean. We've got to know this stuff. So the good news is that once you understand this process, options trading opens up a world of possibilities and profitability. Trades are not subjective. You don't have to take a lot of heat. You build a case very quickly as to whether or not to hold on for the big move or get out, okay? And I'm a big fan. Look, I love trading options. I think there's a lot of great, what I would call more complicated strategies that you can do. And I encourage everyone to expand their knowledge and their education and to learn about some of the more complicated ones. But the main point is you don't have to, okay? You don't need to learn about all the Greeks and stuff like that. If you do, will it make you better? Yes. But if you understand, okay, if you understand the reasons and the triggers for the underlying movement of the stock, that gives you 90% of the information that you need. Now from there, you may say like, okay, well, I want to increase my odds, so I'm going to sell a put credit spread. Great, okay? But you don't have to get more complicated than that if you don't want to. So that's the kind of stuff that I think is pretty awesome. The other thing to keep in mind, and I'm a huge fan of this, because in trading, and this is, I'll give credit where credit's due. It's a quote from Tony, making money is easy, keeping it is the game. I'm a big fan of taking cash out of the market and turning it into tangible assets, okay? This is what I call the Tesla ranch when I made that big trade. Since then, I've added land to it, and it's just something that I think is just important to do. That's how you preserve the gains that you make. Otherwise, Wall Street can find new ways to take it back, okay? So at the end of the day, I'm a trader. For now, I don't mind sharing what I'm doing. At some point, I'll stop. I always joke it'd be easier if all I was doing is trading, but there is some fun in this. I don't know why. That's just one of those things where it's like, I mean, it sharpens my own focus when I have to explain what I'm doing. And I'm certainly not a perfect teacher, and I sometimes cringe at having to quote unquote sell stuff, but I'm very passionate about what I do, and I just love trading. I love connecting with anyone who gets the trading bug. It's just a cool universe and a cool world to be in. So these are tools that I like. We've got a lot of clients who have done this stuff. It's helped them out. This is James from Phoenix. Hey, when I saw the advertisement for this training, I told my wife I was going to spend the money. She thought I was nuts, but I closed out the trade. It was awesome, and this is part of the stuff we do with our live trading that works. You know, it works really well. So we've also got a great team here. Need to update the photo. We've got an awesome team here of people that are just kind of, you know, ready and willing and able to help. So what we're going to be doing this Saturday, and by the way, I've got some more slides to show you. I want to stick around and I want to answer questions, but I want to kind of show you this for those of you that want to dive in. I'm going to be teaching a class this Saturday that talks about all this stuff. Okay, and you'll notice here that there are 3 different classes, and I haven't talked about this one yet. So the pro class is essentially, we're going to be doing a class on Saturday, okay? So it's Saturday, December 16th, and if you're brand new to options, there's going to be a bonus session from 10 to 12 that gives you kind of options 101. Also, so you can dive in and learn all the strategies to trade ETFs, we're giving away our ETFs course. This was a class we did a couple of years ago. It tells you everything that you want to know about ETFs so you know how to apply these strategies to ETFs, okay? Then we're going to go through the specific strategy for trading these expansion moves with the multi-squeeze indicator, okay? And it includes a copy of the multi-squeeze indicator. Now, the elite package, which typically is the most popular, is that, you know, you're going to get all that, but you're also going to get the hedging strategy indicator. Okay, that's the one that I was using on the daily and the 60-minute chart and the 5-minute charts. You get that tool, but then we're also going to spend time on Saturday talking about the specific strategy on how to use it. This also includes 3 live trading sessions, and we're going to do these trading sessions that Monday, Tuesday, and Wednesday following the class. So I think that's the 18th, 19th, and 20th of December. So we're just going to knock it out. So that's that. So let me just see what questions you guys have. I'll show you what the master's one here is in a second. But if you're interested in this, the class is proving to be very popular. I think these are the kind of tools that'll get everybody kind of on the right path for not only the rest of this year, but also, of course, for 2018. You can go to simplertrading.com/ETF. If you have any questions or if you need help expediting your order, you can give us a call here at 512-266-8659.
Quick audio.
So I've got a couple other slides I want to show you. I just wanted to get you this for those of you that are, raring to go and want to learn this and kind of invest in your trading strategies and plans for 2018. And then I want to hang out and get questions and things like that too. Yes, so on the top hit strategy, there's a very specific scaling methodology that you do. And there's also very specific signals that you look for the chart. So the top hat is a heads up. Typically, so if you're going to get 5 calls, you start off with 1, okay? So it's definitely a scaling in. So I'm going to show you exactly how the algorithms do it. And they do the shares, and they start off, they'll do like 1,000 shares, then 2,000 shares, then 4,000 shares, and 8,000 shares. I don't get that aggressive, but we're going to show you how to do that essentially with options. So how does it track algos? So it's not, what it does is it's picking up so if you think of an algorithm, what is it? It's a black box out there that automatically, on a specific set of circumstances, automatically takes a trade, okay? So it's this is a specific scale-in strategy that they're using, and it's just kind of mimicking. It's like, all right, the black box is getting the signal here, here's the signal, and this is what we want to start doing. All right, let's see what else there. Yeah, and we can actually, if you want to look at a couple of things too. Well, what's cool too, of course, is with the cryptos. So Bitcoin, of course, has futures coming out. So we want to get those kind of settled in and going and stuff like that too. So a few things like that. You can see today on the NASDAQ futures, we did get right around 64.30. We got those 2 signals, and since then we've just been kind of, drifting back and reverting back to the mean. So different things like that, and so we have different kind of strategies for the indexes and stuff like that as well. Oh, okay, so good question. So what is the power correlations? So let me show you this real quick. This is, it's really more actually for more advanced traders. So if you're, kind of a beginner and getting your feet wet, I would definitely recommend, the Pro or the Elite. Don't let the names, misguide you. If you're just beginning and starting off, on this Saturday class, December 16th, we're going to give you a lot of kind of a pre-class hand-holding. So again, the class will start at noon. So from 12 to 4, I'm going to talk about that specific multi-expansion strategy, and that'll lay the groundwork so then when later in the day, for the people that are doing the elite class and you want to learn more about that algo strategy, we can dive in and layer that on top of it. But from 10 to 12, it's going to be kind of a newbie class, like, hey, you're new to options, don't worry. We'll take you through a process of this is, calls, these are puts, this is buying, this is selling, and stuff like that too. So the next question here was, what is the power correlations? So let me show you this real quick. Again, this is very powerful, but what you'll see is that it's, it's definitely for more advanced traders. So on this, couple things here. So let's say that here's the cues. You can see that there's some top hats popping up, and you just want to see like, okay, I like my stocks here right now. I don't have any cash. I've got 20% of my portfolio in Apple, 20% in Amazon, 20% in Facebook, 20% in Microsoft, and 20% in Netflix. I'm getting a little nervous about this. What happens if the NASDAQ, reverts back to the mean? Well, gosh, my portfolio is actually correlated 80% to the NASDAQ. So if the NASDAQ gets crushed, my portfolio is going to take a licking, okay? Now, in this scenario, I think it's fairly obvious. Obviously, if you own all tech stocks and the cues are, giving a signal that they're going to pull back, your portfolio is going to get hurt. What's powerful about this, though, is that you can then play around with this and change your correlation. So now, here's the same signal and say, all right, what happens if I change this out and say, you know what, I'm going to raise some cash. I'll get some inverse Qs. I'm going to get some TLT, JP Morgan, Disney, and FXY. Well, now all of a sudden, my correlation to the Qs is negative 0.2, which means if the NASDAQ falls, my portfolio will actually increase in value, okay? So that, to me, is kind of fascinating because you can play around with a lot of different things. If you've got all tech stocks and the euro, okay, suddenly has a squeeze, and you want to say, well, gosh, if the euro squeeze fires long, is that going to impact my portfolio? Boom, you type in FXE or /6E, and it's going to give your current portfolio a correlation to the euro. Do you need to be worried about your portfolio if the euro is going to squeeze along, right? So to me, I mean, it's a more advanced tool, but it's like, guys, especially if you've got a bigger portfolio, this is the kind of stuff where hedge funds pay hundreds of thousands of dollars for software to learn their correlations to different asset classes. This is a tool that's included with that master class, and you can do this on your own, okay? And I just think that's incredibly, incredibly powerful for those of you that are kind of interested in that, all right? So it's very cool stuff there too. So this really begs the question, do you know how your portfolio will react if the Qs tank? But more importantly, what happens if the euro explodes? What happens if bonds go lower, okay? How is your current portfolio correlated to that movement, right? So this is the tool that can help you figure that out. So you're not, so the year of 2018 for me is like the year of no surprises. You know, I don't want to sit there and say, gosh, the euro is setting up a weekly squeeze, and to say, gosh, you know, if I had known that when the euro exploded higher, it was going to impact these three stocks, I would have sold them. Well, now I can know. I can see in advance. So then I can make the adjustments as necessary so I can, you know, not be in front of that situation, which is awesome. So you can play around with different scenarios offline. You can tweak them until you find what's right for you. And you go out in the market and you acquire those positions. And more importantly, you can do it with the correct size. So you sit there and say, like, gosh, you know, I really shouldn't have half my portfolio in Apple, you know, based on this. I think I'll reduce it to 20% and use that other 30% to get exposure to long yen and some TLT or raise some cash. So there's all kinds of really cool things you can do this. And now you can actually treat and act like your portfolio as if you were a professional money manager, because this is what they do. So it's a really cool tool. I would say if you're a beginner trader, you don't need to worry about it. This really is kind of for, you know, people with larger accounts, more advanced trading. But it's really cool because it does give you kind of the same tools that the hedge fund manager has, but you don't have to pay hundreds of thousands of dollars for it, okay? BlackRock has a software program that's $250,000. I've seen it. It does a similar thing. So anyway, so hopefully that helps. So again, so if you go to simplertrading.com/ETF, so again, the pro version, that's a Saturday class, and this will be this Saturday, December 16th. And then keep in mind that from 10 to 12 will be the bonus session for Options 101. So if you're newer to trading options, I just don't want you to feel intimidated. And then from 12 to 4, we're going to have the class talking about the Haystack method, which really is essentially the multi-squeeze expansion, how to find them, how to play them, how to understand the market movement, okay? And then this will set the groundwork for those of you that do this, and what we'll do is from 12 to 4, this will be done, and then that for everybody who did the elite, we'll continue on and do the hedging strategy, okay? How do you scale in and do all that kind of stuff? And then, of course, you get the indicator. And then we're going to do 3 live trading sessions on the 18th, 19th, and 20th. And we're doing it that Monday, Tuesday, and Wednesday so we can knock it out before the holidays, because those 3 days will be pretty good trading. All the live trading we've done this year, people have made enough money during the class to actually pay for the class. So that's always kind of the goal that we do. Obviously, we can't guarantee it. We don't know how the markets are going to be. But guess what? It doesn't matter because we're trading signals. We're not trading direction. It doesn't have to be an up market, right, to make money. And then, of course, the master class includes all of that plus the correlations tool. Also, we have scheduled our first live event in Austin. It's going to be at the end of March. And for those of you that sign up for any of these classes, you'll get an opportunity to sign up for that at an early bird price that will not be available to anyone else. And the live event is fun. It's an in-person event in Austin at the end of March, includes a live poker tournament. We all, we all get to hang out, and those are a lot of fun. So that'll be, I don't know if I was supposed to share that or not, but that's something that you'll get a chance to then sign up for if you're interested in that. So that's what we got. Should be a lot of fun stuff there. So let me just hang out here. I can answer questions. We can look at charts. Okay, good question. For the live trading, is it typically all day or just the AM sessions? So typically, the live trading, we tend to do, it's generally market hours. So I'll do central time here. So the live trading, we'll do about 8:15 to 3:15 central, usually it's like a 90-minute break for lunch. So we do heavy open into late morning, 60 to 90 minutes for lunch, depending, and then go through the close. So we'll do that Monday, Tuesday, Wednesday. So it's fun though. It's good times. And if the market's slow, we'll talk more about, so what I've done is that, I'll be obviously specifically looking for strategies that kind of fulfill the lessons that we talked about on Saturday. Now, if there's other things that set up, I'll take those too and show you and talk to you and tell you exactly what I'm doing. We're going to focus on options, but I will do some futures trades. If the Bitcoin futures are given a signal, I'll do those as well. So it's really just kind of, a little bit of my main method, the main reason to do the live trading is kind of the main reason that, so here's the idea that let's say that you're going to go play golf with your boss on Monday. So you've never played golf before, and over the weekend you read the top 3 books on playing golf. You've never swung a club in your life, but you read the top 3 books on trading golf. So you go and meet them. So what do you think is going to happen you're going to hit the first drive off the first hole. You've read the books, you know everything strategically based on the books, and what do you think is going to happen when you swing the club? It's going to be a disaster because you don't have that hands-on practice. And so the idea with the live trading is to get you in an environment, kind of a mentoring type environment, where you've got the hands-on practice to actually spot specific setups, ask questions. I'll be doing them live, so you'll get to see me doing them in my own account. But also because, the markets are the markets. What do you do if the market gaps up 40 S&P points? What do you do if the stock that you're looking at, blows through your stop? What do you do? Where are your targets? How do you scale in? I mean, all that stuff is great, and it's, and we'll talk about it on Saturday. But then when you do it in real life and you do it in practice, it gives you the confidence to do it, okay? When you sit there and you're swinging a golf club and you've got a golf pro watching you, correcting all the nuances of your swing as you're doing it, it's easier to develop the skill set more rapidly. And that's all trading is a skill set, okay? And one of the best things I can tell you in terms of trading is that stop trying to make money. Okay, that's what everybody tries to do, and that mindset over time does not work because it causes you to make a lot of mistakes. Instead, on your next trade, try to become a better, more skilled trader. On every trade that you're doing, think of it as, on this trade, I'm going to increase my skill set as a trader, because then you actually start trading correctly. And if you start trading correctly, it doesn't mean you're going to make money on every trade, but it means the ones that don't work out, you're going to cut loose and you're not going to cry about it, right? And the ones that are working, you're going to let them run because you're working on increasing your skills as a trader. So if you learn how to do the trading skills properly, the profits follow. And it's the toughest thing in the world because guess what? None of us ever place a trade where we expect it to lose money, but the reality of it is that some of the trades we place don't make money, okay? So anyway, hopefully that makes sense. We'll talk more about that, but part of the trading is the mental game. And so by doing it live, we can actually talk about the mental game live as it's happening. Okay. Now, what will happen, just so you guys know, on the live trading, typically what I'll do during the first hour and a half is we just dive right into it. Like, I'll just start placing trades. I'll talk about it, but it can sometimes go fairly quickly, and sometimes it could be a little overwhelming. But then we go back and we review it, okay? Because I like you to see what I call a real environment. When I learned the most in my trades was when I got to sit next to a trader for like a week and just watch them trade. Like, you know, what are they doing? Why did they do this? Why didn't they do that one? And that it just helped get to see somebody doing it. And you know, and there's different people; they have different styles. But what I found is that all their methodologies were fairly simple, very rules-based, but then they also knew how to take advantage of unique situations simply because they'd been around the block and they knew kind of what to look for. Oh yeah, no thanks, Bob. Yeah, the Austin experience is fun, and I always I mean, these webinars are great. They're easy for all of us. You know, you guys get to stay in your homes. I get to stay. None of us have to travel, but the live events are great just simply because we all get a chance to kind of hang out. All right, let's see what else here. Do you have anything like that trading along with you guys for simpler trading customers? I'm not quite sure what you mean. I mean, we do have a trading room. So what we do in the trading room is that we'll just, any trades that are setting up, there's about 8 of us that kind of rotate through there. The idea of this live trading is essentially it is a highly intense, focused event where we're only trading this strategy and we're looking at trades from beginning to end. So the idea of a live trading mentorship is more of kind of like, think of it if you sign up for 3 sessions with a golf pro. You're sitting there kind of getting critiqued on your swing. And that's the goal with this, is that it is a focused live trading event on a specific strategy where we're specifically looking and executing those trades. Sometimes, like today, I was in the trading room and there's not much, it's like, oh, let's do a spread here. We're looking for options expiration. But during the class, it's going to be, all right, we're going to be looking at these 3 different time frames. We're specifically looking for these things so we can actually do them and execute them so you can see what it's like in real life to do these specific trades. And then from there, what will happen is that, sometimes in the trading room, if I'm doing one of those, for people that hadn't been in the class, they're not going to understand the methodology. It's like, okay, well, what do you do with that? Well, this is going to be the first scale in, and, and because the management part of it is what you learn during the class. So the goal is at the end of the class, you guys can do it all on your own, which is great. Richard, will the indicators work equally well with futures, i.e. any mini S&Ps, et cetera, et cetera? So the answer to this is overwhelmingly yes. So they're actually, the algo strategy specifically is designed more for futures. I would never do it on silver, okay? I've talked to guys who have run CTAs doing reversion to the mean strategies. One guy almost blew up his entire fund on silver. So there are things like that I'll tell you that there's markets to avoid. Like never do it on silver, but S&Ps are, they're one of the better markets to do it on. If we look at the S&Ps, well, in fact, like right now, you've got, on a daily chart, and I'll talk about this too, and it's just like, the whole scaling in. So like something like this, I'd scale in with options, like on the spiders or SPX. But then on the hourlies, when you get this, you're looking for more kind of an immediate reversion to the mean. And it's like, oh, that's not, and here we kind of we moved back, but that's a drop of 10 points. That's a real move in the S&Ps, and it's very likely that we come down to 2656 before that's over. And then another one that it actually works well with is crude oil. Now, crude oil, you don't get as much on the daily, but you do get a lot on the, like on the 4-hour, so the hourly chart on crude is my favorite. So if you look at this and say, okay, well, gosh, we're a little far away from the mean, back to the mean. Oh, we're a little far away from the mean, back to the mean. And honestly, once you start doing reversion to the mean trading on crude oil, you almost never go back to directional, which is almost that's saying a lot. Eric, are we able to do these for Ninja as well? I see a couple of people asking that. I cannot make Saturday. When will you be having the class in 2018? So I don't do repeat classes, so we're not going to do it again. However, what I would encourage you to do is get the class, and then you can watch the recording. Once this is kind of our early bird pricing, once it goes into our store, the prices are raised. So I'm not a huge fan of doing the class over again, so I put my heart and soul into like, okay, here's a strategy, and then we have the recording of it. We are looking at scans for top hats, absolutely. Yeah, and gold as well. Crude oil, for futures, crude oil is one of my favorites. Gold's okay. Gold, the metals kind of freak me out sometimes, but I mean, gold does revert back to the mean as well. Gold just has weird moves. But if you're comfortable with it, but I do really like crude oil for it. And what's great though is anything you're looking at, you can throw up a chart and just see. It's like, okay, well, how is it responding? Okay. Yeah, so it looks like we do have it for Trading View, and then if there, we will for people that are interested in NinjaTrader, if there's enough. So part of it is just if there's enough, it's like, if it's like, it's one of those things that we'll look at. Okay. Yeah, so good question. Eric's just saying, John, my biggest hang up is when to actually trigger the first buy in a squeeze. Okay, yeah, that's exactly what we're going to dive into on Monday. And I think, so the nice thing too is that when there's multiple squeezes, it makes it easier. But I'm going to talk about, I'm a big proponent of kind of a scale-in strategy for that as well. And we're going to talk about specifically exactly what options to buy, okay, how far out to buy them based on the time frame, just so you kind of have a checklist, and that way you don't have to wonder, like, okay, when do I do this? Any reason that you use the 20-year on a daily chart, can you just use the 2-year? You can absolutely just use the 2-year. I like to use, sometimes I'll use the 20 because I like to go back like 5 years, 6 years, 7 years, and it's like, okay, what happened then? But you don't need to go that far back. Are you able to tweak the parameters of these studies? Yes, you are. So we will, so a good question. So can we just buy the multi-squeeze indicator? So just so you know, we will, at some point, once the class is over, we will offer just the indicators themselves. Now, just so you know, the multi-squeeze indicator, I believe, will be coming out at $497. So the nice thing is with the class, it's kind of like the same price, plus you get all that information on how to use it. So that part's up to you. If you're not, if you're like, you know what, I don't need the strategy, I don't need the class, I just want the tool. At some point, the tool will become available. Oh, no, good question, Gator. Do these indicators only work if these stocks are being acquired by the institutions? So that's a good question. So that's not necessary, but what I've found is that stocks with, heavier institutional ownership, and on Saturday we're going to talk about kind of a checklist for which stocks to do, tend to react better. There's going to be, and also, recent IPOs, I'm not going to do this on, right? You've got to have kind of a certain amount of history. So, there are some stocks that I wouldn't do this strategy on. There's just, and a lot of that has to do with market cap. If a stock has a $2 billion market cap, it could just keep going on and on and on and on and not get into that institutional flow. So the good news about this is that a lot of the names that it works on are typically the more liquid names, so especially when it comes to options, which is great. I'm super excited, too, to start using this more on the cryptocurrencies. How do you determine if options are fairly priced or overpriced, considering you might be buying out-of-the-money options? So great question. Now, by default, I prefer in-the-money options, typically a delta 70. However, I also like to take advantage of going theta positive, okay? Now, if you're more advanced, there are programs you can run and say, gosh, I'm looking at the delta 70, 60, 50, 40, 30s, and based on this, the 30s are actually overpriced and the 70s are underpriced. And you can do that. The nice thing, though, is what I've found is that with this expansion strategy, it kind of allows a lot of room for error. So if there's an option chain and you buy an option that's kind of slightly more expensive than another one, it's not going to, I would say, harshly impact your results, if that makes sense. So it's a good question. It's a little bit, it's one of those things that if you have the tools and says, well, of all these options based on, theoretical pricing and all this kind of stuff, this is your best deal, and that's fantastic. But it's not a make or break to the strategy. Yeah, so haystack method versus top hat, sure, and that's a little confusing. So the hardest thing about these classes isn't the classes themselves, it's what to name it. So the haystack is kind of the idea of finding a needle in a haystack. So this really what this is, this actually really should be probably the multi-squeeze method. So this is what we're going to be talking about on this day is the multi-squeeze, and then on the elite, we'll be talking about the multi-squeeze and the top hat, which is the algo strategy. Yeah, Peter, absolutely. Yeah, if you just want to, so if you're sitting there going like, well, this sounds good, I'm not sure, my recommendation is just do this one, because then what will happen is you will have an opportunity, if you want to upgrade, and that'll give you a sense of, okay, yeah, this was really awesome, and I want to continue building on this foundation, or you know what, this was plenty, and I'm good. No, well, part of it is big block selling, but part of it too, Helen, is just the price action takes on a different flavor when there's distribution. But it's not an immediate downtrend is the thing. So it's kind of recognizing what distribution looks like in an uptrend when the market's still going up. How do you enter your portfolio into the correlations indicator, i.e. if you have day trades, swing trades, long-term trades? Yeah, so Brad, so you just plug them in individually. So it's not going to automatically read your portfolio. So it's not the the $250,000 version from BlackRock automatically reads your portfolio. So it is more kind of inputting in manually. And what I do is like directionally, it's like, okay, if I've got calls on Apple, that's easy. If it's a put credit spread on Apple, it's a little different, but what you can do though too is that it's more, you can enter in the amount of risk in your account. So say you have a $100,000 account and you've got a $10,000 max loss on an Apple put spread. Well, you could put in that 10% of your portfolio is represented by Apple. So we'll talk more about that, but it's, again, compared to something like the $250,000 software from BlackRock that tells you exactly what's going to happen, this is something where it's like you can get close. You can kind of get into the ballpark, so at least you've got that data to make some decisions. Steve, yes. So generally what I like to do is I like to look for at least 3 top hats. So on the first one, if I see one, that's kind of my heads up. The second one, I'll start taking positions, depending on the time frame. And we'll do a deep dive into that on Saturday for sure. Will communications be live in the class or only by chat box? So during the class, only myself will be on the mic. I'm going to have some help as well. Eric's going to come on for the Options 101. Henry and Danielle are going to help out, and then during the week we'll have some help as well. So whoever's the moderator essentially is on the mic. So, but everyone else, there'll be an open chat forum. So what we do is during the actual class, it's more of a chat. So you can actually see everybody else's questions too, which I think is great. It's more of a community. Which will be the best day to attend the live sessions, as I cannot make it on all 3 days. So I would say if you could only do one day, do Tuesday. That's the middle day. Tuesday is one of my favorite days to trade. Monday, we'll have some time to kind of set stuff up, but I would say if you could only do one day, do Tuesday. If you can do 2 days, that's trickier. Just make Tuesday one of them, and then just pick one of the other ones. Okay. Yeah, and so just to review again, so this class, now if you cannot attend it live, that's fine, but you're interested, I would encourage you to still get the class because you can lock in this early preferred pricing, because when it goes into our store, it becomes higher price, and you can watch the recording later. And again, just keep in mind, this is going to be on Saturday, the 16th, and there's going to be a couple of sessions on this. So from 10 to 12, this is going to be a bonus session for your newer folks, all right, and that's going to be kind of an options 101. So that way you're not, if you're newer to options, you're not intimidated at all. You'll kind of get the basics there. And then from 12 to 4, I'm going to teach essentially the multi-squeeze method, okay? And we're gonna go into a lot of nuances here. We're going to go into a lot of strategies. We're going to talk about specific checklists on how to do that. But then this is also, for those of you that are doing the elite class, this is also going to lay the foundation for this class, okay? And then what we'll do then is we'll take a break, and then from about 4 to, I don't know really, 4 to 5, maybe longer, then we'll do the top hat strategy. And then we can also then, after that, we dive into the power correlation strategy. Now what I'll do is during the Saturday class, I'll just say, look, if you guys are brain fried, we can do the correlation strategy on Monday, okay, which actually may make more sense. But we'll, you know, we can kind of, we'll get to that. We'll cross that bridge when we get to it. I always like to do a mental check and see how everybody's doing. But we definitely want to do the entire Saturday class, the whole multi-squeeze and top hat. We want to knock that out on Saturday, so we're ready to go. Can we place trades during the live sessions? Absolutely, yes. So the idea with the live sessions is that you can follow along with what I'm doing. You could do the opposite of what I'm doing if you want to. You could place your own trades. You could do it in a demo account, or you could just watch. Either way. But the main thing is just so you can see in a real environment how this stuff works. Will this tool really be necessary for cryptos now, or maybe more so as the volume in cryptos begins to pick up? Well, so the cryptos, what's interesting right now is that, oh gosh, is it XBT? I'm trying to remember the Bitcoin. See if this pops up here. Yeah, so you'll notice here in crypto, so here's the crypto futures. So look at this now we're not, this is all newer data, so we don't have a ton of data here. But look at even on a 5-minute chart, this thing's reverting to the mean all over the place. We're going from 18,700 back to, here. So I think this is going to be very viable in cryptos. So I think there's going to be a lot of fun things to do with that space too. All right. Yeah, and I'll break down the indicators and what they're made of and stuff like that too. A lot of it is, so for the top hat, it's looking at 3 different time frames, and it's looking for alignment on all 3 different time frames of a specific distance away from the mean. That's kind of what triggers the black boxes and things like that. So we want to look at that. Oh yeah, thank you. So let me review this again real quick. So we did the Saturday class. So again, Saturday, December 16th. So then we'll talk about the live trading. And then again, it's 10 to 12 for options 101 for those that are newer, 12 to 4. That is going to be the multi-squeeze method. And then from there, we'll take a break. And then from 5 o'clock on, we'll be looking at the top hat. Now, the live trading is going to be on December 18th, 19th, and 20th. Okay, so it's going to be a power pack 3 days, and it's going to be during market hours. Okay. And then keep in mind that with the Pro, you get this indicator. With the Elite, you get the multi-squeeze indicator and the top hat. And then with the Master, you get the multi-squeeze, top hat, and power correlations. All right? Yeah, this will be fun. Yes, thank you. These are all Central Time, yes. Oops, that was bad. So Central Time. Okay? If you guys have any questions, I'll be in the room, this week as well. We'll send you more email confirmation. This is going to be a great class. It's going to give you the tools and essentially the knowledge necessary to knock it out of the park for 2018. The markets are changing. You want to be aware of this stuff, and you want to know how to trade it. So I'm super excited about this class. This is what I'm incorporating into my own trading plan. I'm excited to share it, and looking forward to working with you guys on Saturday. You guys have a fantastic evening. And have a good night. See you bright and early tomorrow, and we'll be rested and relaxed and ready to go this upcoming Saturday. Have a good one.